some of those specifics, if you wouldn't mind. Like, are you looking at the repo market? Are you looking at the shape and the slope of the interest rate curve? Walk us through some of the features that you're watching.
Well, I'll focus on things which are actually repeating today, if you don't mind.
Great.
One of the interesting, like the sharp rise in oil prices has been, and there's been a debate on Twitter and people like doing yes and no on sharp rise in oil prices as foreshadowing of recession. And again, if I told you this today and it's the first time I did work on it, it would be spurious. But I did that work in 2018. And I wrote in my investor letter in 2018 showing how rise in oil prices has a pattern of foreshadowing recessions. So that's, for example, one thing. Another, paradoxically, strong employment, very tight labor markets typically foreshadow recessions. And there is a logic there, because once the labor market tight, you cannot grow anymore. Now, there is some argument whether the labor market is now tight or not, because some people say it's tight, but it's not really tight. It's because of low participation. But it acts as it's tight. And in the past, that was foreshadowing a lower interest rates. Yield curve, I have a little different attitude towards the yield curve. It's definitely to be looked at. And I did notice the fact that whenever yield curve goes inverted, like one of my favorite saying, whenever yield curve is inverted, it's not inverted enough. So right now, the market shows easing in 2023, 2024. Whenever that shows that, not only it will occur, but there'll be much more of it unpriced. I don't know precedents on market aggressively and continuously priced easing, and easing didn't happen. How that prescience works, but my theory, I'm a little cautious with yield curve indicator, because I think long ago I made this example. If you're falling off the 20th floor of a building, flying by the 10th floor is a really good leading indicator that you're going to hit the ground. You should already be knowing that you're falling.
Is the broken
yield curves invert, you should already know that something is off here. So there are disjoint equity price actions, like disconnecting between different equity markets, and like sectors really diverging from each other is also a sign of late cycle, for example, for me. And I don't know, would you agree or disagree? People here probably know more about equities than I do, but it feels like there is some sector divergence happening.
But we're definitely seeing some rotation.
Yeah, but it's a difficult. I'm a little cautious with those statements, because it's so easy to make a statement there is some rotation, because there is always some rotation, right? But the feel of it, this is more art and science here. The feel of it is late cyclish for me. So those are the type of examples. I don't want to spend a ton of time on this, because I've been pounding on this indicator for a while, but my interest rate momentum indicator is flashing absolute red for stock market. That is
red, you said.
Red, yes, like very negative predict. I've never seen my favorite indicator being basically as negative for stock market as it's been in my career.
Can you drive a little deeper? What indicator is that?
The difference between 10-year yield today and 2 years ago and today. Very simple. Has the 10-year yield risen or fallen over the last 2 years? And the fit of that chart, and what is also very relevant, that I published this chart first time in my first book in 2015, and I saw the amazing fit. And then since then, and I charted it, and since then the fit continued to be amazing. So I had kind of the quarantined 7 years of data, which I could not have known now, confirming my pattern. And the pattern has been amazing, because think about this, like if you think what happened, 2013, 2014, taper tantrum, rates have risen. 2015, 2016, 2 years later, we're having industrial recession and Brexit and correction in markets. What happens in 2016? Rates have fallen. What happens for the next 2 years, 2016 to 2018? We're having rising stock market. What happens in 2018? Rates have risen versus 2016. What happens next 2 years? We're starting to have trouble with stock market long before COVID. 2018 is having a correction, then we're having COVID bear market. What happens in 2020? Rates have fallen. What happens next 2 years? Extremely bullish stock market. What do we have now? rates have risen.